fundsupermart.com.
So what's your view on the infrastructure sector in 2012?
I think 2012 holds some good opportunities for the infrastructure sector. The year started well for equity markets, but there's no doubt that there's many challenges still ahead of us. Governments have very few options regarding fiscal and monetary policy. What we see in the infrastructure sector, though, is a market that has very defensive earnings. So if things do turn down, we're certainly comfortable that the earnings will hold up. It's got a generous income yield coming through, some 4.5%. Our companies have the ability to raise prices, and we think as growth slows down around the world through austerity, that growth from structural sources will become more and more important. There will be ups and downs in markets, there will be ongoing volatility, but we think infrastructure, because of its underlying fundamentals, will look quite good in 2012.
Versus broader equity markets, how attractive is the infrastructure sector in 2012?
Yeah. Look, as we saw in 2011, these underlying qualities in the infrastructure sector should help it perform robustly. We tend to expect a 10 to 12% total return through the cycle. Some years will be better, some years worse. But as we saw in 2011, we generated a positive return from that structural growth from inflation-linked pricing when markets were down anywhere between 5 and 15%. So we're expecting another consistently good performance from infrastructure in the year ahead.
Are there any risks that infrastructure investors should be aware of?
Look, there's always risks investing in markets. It is an equity that we're offering, an infrastructure equity. So if markets turn down, there'll be pressure there on every stock, regardless of the underlying quality. But I think as we've seen, because of those defensive earnings, there's the ability for the sector to hold up well. I think in terms of particular risks for the infrastructure sector, we really need to think about the risk of political intervention. So we've seen in parts of Southern Europe, in some emerging markets, in an effort to control inflation, governments have restricted returns on some infrastructure assets. So an awareness of political and regulatory risks, having a strong legal system behind you, is very important when investing in the infrastructure sector.
Within the infrastructure space, is there a particular investment idea you are strongly bullish and bearish on?
Yeah, well, we've got a few good ideas at the moment. I'd say some of the structural growth stories continue to look good. Vopak, a Netherlands-based oil storage company, is meeting the needs of security of energy supply. In the US, we've got a company called Crown Castle. It's a mobile tower operator, and as we know from the iPads and iPhones that everybody has now, the demand for that service is only increasing. We also see select opportunities in Europe. Europe's been impacted because of the general concerns we have there around sovereign risks, but we can buy an Italian motorway on 10 times PE, 6% yield. There's a lot of risk factored into share prices today that point us to significant upside in the future. In terms of some bearish areas, we think that some really defensive sectors, regulated utilities, energy pipelines in the US, they've done their job as markets turn down, but they're starting to look relatively expensive. So we think they'll do okay, but there's not significant returns ahead for some of those sectors.